What's up, everybody? It's Stas here. Welcome back to another video. As you guys read in the title of this video, I just wanted to go over the top stocks that I'm currently watching and looking to trade in the third week of February in 2018. So before I get into the topic of this video, let me talk about Think or Swim a little bit. If you're a beginner to the stock market and new to my channel, this is what I use to analyze all my stocks, and I recommend it to you. If you're a beginner in the stock market, this is the best platform, in my opinion, to better understand where to buy, where to sell, and how much potential for profit is pretty much involved with every trade that you can get into. So this is what I'm looking at, guys, and let's hop right into the topic of this video. So you can see right here, guys, Gush is the #1 ETF that I'm actually watching for the third week of February in 2018, and this actually is an oil-based ETF, and it trades on this particular index right here. So whenever this index, the S&P oil and gas exploration products, whenever this index does well, right, Gush does well. Whenever this does poorly, Gush does poorly. And what we can notice between this particular index and Gush is that the EMA line is pointing up, right, and it's actually trading above the EMA line, and it's validating that EMA line by bouncing above it. So that is a very good sign that an uptrend is coming and that it's trying to confirm this particular uptrend. So if we look back at Gush, the same exact thing here, right, guys? The EMA line is pointing up, and it's actually trading above the EMA line, and it's trying to validate this particular uptrend. So like I said, whenever you look into a swing trade, I'm a swing trader if you guys are new to my channel, and what that pretty much means is that you hold a stock for a couple of days, maybe even a couple of weeks. So what I like to do is focus on ETFs and stocks that have seen a huge sell-off and that are starting to pull back and confirm an uptrend, because this offers obviously the biggest potential for profit, right? If we see it peaked off at $37 and it dropped all the way down to $20, that offers a huge margin for profit from $20 to $37. It's pretty obvious, right, guys? So this is what I like to focus on. And now that this stock has actually started to confirm an uptrend, this is one that confirms my criteria. So first, we like to look at a support, right? We like to validate a support. This is where usually the stock tends to hold above and bounce above, right? And that's right around here at $20. It hit about $20, right? And it's starting to bounce up. That's a very, very good sign. That's step one to confirming an uptrend. The second thing we like to do is identify a resistance. And we see a resistance here at about $30, and that's where usually the stock tops off, right, and starts to fall down from there. We can see that Gush has topped off at $30 once, and it fell down twice, and it fell down, right? So that we can confirm that as a resistance. So now we can identify potential from profit from the support level to the resistance level. So let's say we waited for that confirmation of an uptrend right around $20, right? And we got in at about, let's say we got in at about $22. It's currently at $21.90, but let's say Tuesday, because the market's closed on Monday. So let's say we get in at around $22 and we ride it up to $30. That's actually a 25% potential for profit. And the most important thing, guys, is to wait for the confirmation of an uptrend and to have a plan set in mind. So if I was a person that wants to get in at about $22, right, and wait till $30 to sell, I would have a limit order which pretty much sells however much shares that you specify. Let's say you want to sell all your shares at $30. You can pretty much do that. You set a limit order and it sells all of your shares. So I would set a limit order at the price that you want to sell at and take profits, which is $30 in this case, and I would set a stop loss at however much percentage loss that you're willing to lose if the stock or ETF doesn't go your way. So for this case, I like to go anywhere from 2 to 3% potential for loss, depending on how much reward any particular stock or ETF gives me. And with this particular one, guys, I see much more potential for reward rather than risk. So that's why I'm willing to, invest into it. So that's the #1 stock I'm watching for the third week of February in 2018. And the second stock I'm watching, guys, is HAIN. And I've mentioned this in previous videos, and I just figured I'd mention it again because I'm still actively investing in it, and now it's the best time, in my opinion, to purchase this particular stock. So let's talk about it, guys. We can see the support, right, is right around like $34, $33. It bottomed out here at about $31. And the key thing about this, guys, is similar patterns forming, right? We see it's literally like a mirror image here. We see it bounced at $31. went all the way up to 45, right? We see it go down to that same area of support right around like 32, 31, $33, and we saw it did the same exact thing. It bounced up to about $43, right? And now we're seeing the same exact pattern start to form and happen, right? We see it bounced at about $33, right? And now it's starting to uptrend, and it actually just broke above the EMA line, and the EMA line is starting to point up, and HAIN is trading above that EMA line. So that is starting to confirm it's uptrended. And if we see the support levels, like I said, right around $33, $34, up to previous resistance levels that we can clearly see here at, I guess we can say the first resistance level is at about $40, and that's where I personally have my limit order to sell this particular stock. We see that's about like a 16 to 17% potential for profit. And if we look at the longer term charts with HAIN, we see that it's never really gone below $31. And we see, like I said, guys, it's done this pattern 2 times already. And from the 1-year chart, it's looking like it's about to do it the 3rd time, guys. This right here looks like it's a good confirmation of an uptrend. And like I said, guys, this particular stock offers 15 to 16% potential for profit. And I've actually traded it for that same amount of profit before, guys. So I know this stock, right? I know how it moves. I've traded it before. I've made money on it before. And that's why I'm sticking to it, guys, because I know how it moves and I know how it trades. So I recommend everyone out there to stick to stocks that you've traded before, that you understand, and that's how you're going to be successful in the stock market, guys. I'm pretty sure I got in right around here. It was like the top stocks I'm watching or trading in November or something. You guys can go back and check it out. But I bought in right around here, and it did the same exact thing, right? I sold it at about like $42, but I followed the same exact technicals that I'm looking at now. The RSI is looking very good on this 1-year chart. I know you guys can't see it, but it's pointing straight up, and it's right around like 38, 39, and that's very, very good, guys. Very, very good, right? And that's the second stock that I'm looking to buy. Pretty simple, guys. Pretty simple. I'm looking at patterns, I'm understanding patterns, and I'm looking at things that I've previously traded, and that's why I see value in HAIN. It just broke above the EMA line, like I said, and I'm going to be adding more in my position with this one because I'm confident that it can get up to $38 to $40 again, and that's what I'm waiting for this particular stock. That's why this is the second stock that I'm looking to buy in the 3rd week of February in 2018. Alright, guys, the third one that I'm looking to trade is actually an ETF called UGAZ. I've pretty much traded this a bunch on my channel. Also, it's inverse DGAS. But for those of you guys that do not know, these are natural gas based ETFs, and pretty much they trade on however natural gas is performing, right? And if we can look at natural gas right here, the way you can find it, it's not even here actually. The way you can find it is slash natural gas NG, right? This pulls up natural gas's chart, and these two ETFs, UGAZ and DGAZ, trade based upon how natural gas performs. So whenever natural gas is dropping, UGAZ is dropping, but whenever natural gas is dropping, DGAZ is rising, right? So we see that natural gas right now is at its all-time low from the past 180 days, right? It just hit $2.53, and it's starting to consolidate a little bit, but it really has not formed an uptrend yet, and it's still looking like the EMA is pointing down and that it's trading below the EMA line, which is something that we don't want to trade yet, right? And we see that natural gas, like I said, it's at its lows, and that's actually a very, very good sign for UGAZ, because if natural gas is at its lows, what do you think is going to happen, guys? It's going to start spiking back up and starting to form an uptrend sooner or later. Even if we look back at the year charts, we see natural gas is low in the past year has been $2.52, and we hit $2.53, as you can see, and now we're at $2.57. So I'm being very, very patient with this particular ETF. And if we go back to UGAZ, we can see that UGAZ itself is starting to consolidate just as natural gas is starting to consolidate. And what we're going to be waiting with this particular one, guys, this is very good because it's actually been consolidating for a couple of days. And that's why I'm watching it very, very closely this week, because I'm waiting for that break above the EMA line, and I'm waiting for that uptrend to form, right? That's like with every single stock slash ETF that I watch. I wait for the break above the EMA line, and I wait for that for that uptrend to be formed. And right now, it's just not there yet, guys. It's just not there, and that's why I'm keeping my eyes close on this. And this is actually the last of the three that I'm going to invest in, because if you saw the previous two, the EMA line was pointing up and it actually already broke above it. But with this one, like I said, it's trending below the EMA line, but we can see that it hit bottoms of 48. Right, and I expect you guys to start to maybe go down to $50, $51. We already saw it go to $51, $50, but we see this slow fluctuation up to from like $50 to $54, and this actually offers great day trade potential. But like I said, I'm a swing trader and I want to hold this for a week or two and maximize my profits on it, right? So we're looking for you guys itself to break above, I'm going to say, $55.66, and that's why I'm going to set my particular alert. You guys at or above, right? Let's just say 56.50. Or let's just say 56.25, at or above 56.25. And this is actually how you set an alert and think or swim. Let me do it again for those of you guys that are beginners. You go to whatever price point you want. You can see here, I'm pointing at it, $56. Let's say we go to $56. We right click, right? And then we go to create an alert. And it's really simple here, guys. We can put whatever value we want here, 56.38, whatever. I'm going to put, like I said, 56.25. At or above. So this is going to alert you once it actually cracks 56.25 and is above it, right? So mark at or above 56.25, create. And now we're going to see here is this alert. And we're going to wait till it breaks above this, because in my opinion, once it breaks above 56.25, the EMA line's pointing up. The uptrend has been confirmed, in my opinion, and that's where I'm going to want to put my money. So if we wait to 56.25, let's say I put my money in at about $57. From $57, from $57 up to let's say about 70 to 75, because that's realistically where I would sell, because this is a decaying ETF. As you guys can see, it's on a constant downtrend, right? So we're not looking for you guys to make newer highs of, let's say, like 130 or something crazy, right? Because it's constantly going down, right? So we're gonna pick a level like around 70, $75 to set a limit order to sell. So anywhere from $70, let's say on the low end, that's 23% potential for profit, to let's say $80 on the high end, right? That's a resistance level right here. $80 on a high end, that's close to 40% potential for profit. So what we're going to be doing with you guys is keeping a close eye on how natural gas is performing. That's the most important thing here. So once we're looking at natural gas, and if we see natural gas start to uptrend, right? If we see it start to uptrend, and we got to keep a close eye on the natural gas reports on Thursdays at 10:30 a.m. as well, right? Once we see natural gas start to uptrend, that is going to be a great time to get into you guys and ride it up to about 75, 80 bucks. That's what I'm personally doing, but that is what I'm going to be doing the third week of February in 2018, guys. These are the three stocks / ETFs that I'm watching and looking to capitalize on. Hope you guys enjoyed this video. Make sure to do your own due diligence, do your own research when looking up stocks and ETFs and understanding where to put your money, because I'm not a financial advisor. You have to understand how to do your own research and pick your own stocks to make money off of, because if you're just going off of what other people are telling you, you're not going to be successful long term. Remember, we want to be able to do this on our own long term and pretty much not have to be fed in order to succeed in the stock market. So like I said, guys, make sure to drop a like, leave a comment, and subscribe. Follow me on Instagram at Stas_surfest_entrepreneurship. Link should be down below in the description. And I hope you guys have a great day, make some money, and I'll catch you guys in the next video.